Welcome back to the morning show on XL7 TV. This morning we've got as our guest Mr. Bob Zdora of the Z Team, Century 21 LeMac Realty. Mr. Chris Nosari from Nosari Home Mortgage. How are you gentlemen doing this morning?
Great.
Wonderful.
I was talking to you, Chris.
48 degrees. I'm going to go out and lay in my lawn chair.
At some time today it'll be 48?
See if I can get a tan.
Okay. You have tanning beds over
No, I'm just outside. I mean,
just
It'll
outside?
be like an Indian summer.
Pretty near.
Yeah.
Compared to what it's going to be on Sunday?
Yes.
Yes.
Yep.
What brings you gentlemen here this morning? I know this is a special event that happened last year.
Actually, you guys had time to fill, but no.
Bob couldn't get anybody else to come, so I got a call like 15 minutes ago. Hey,
Are you up yet?
yeah, my preferred guest couldn't show up. Can you show up? Sorry.
Are you up yet?
Chris is my preferred guest.
Right.
He is
He says
he
that's
really is
all
my
his
preferred
guests.
guest. A year ago, we were here and we spoke about the upcoming year in real estate and where things were going, where we thought things were going to go. Obviously, Chris with mortgages and with having a much better knowledge of that. That's why we bring, I don't need to know everything. I need to know where to go to get it. Mm-hmm. This is where I go to get it if it has to do with mortgages. And so we're here to kind of discuss interest rates. And
So do we have a checklist so we can go through how well the predictions went?
You know, I have an internal checklist because I know what I predicted. And
How'd it go?
And I was my third quarter prediction for 2023 was 6 3/4 to 7% on the interest rate. Rates went to in our office. Rates went maybe to 7.5. So, and that was a starting point of rates at 4.5. Probably the beginning of.
We're 5-ish in the beginning, like in January.
So I mean, I think I did pretty good actually. Yeah. So, much to my chagrin, I was fairly accurate.
Yeah, right. Sometimes you don't want to be as right.
No kidding.
You know, you look at last year. You know, when we did this and brought you guys on, there was so much fluctuation going on. You had COVID, which turned around and brought everybody into Mountain Home, bought up the homes. All the prices of the homes went up because there wasn't that many left. And then interest rates started playing and everything was changing so fast. And that's where, you know, bringing you guys on to kind of understand more of the changes that happen and also what is to expect. And I think everybody was expecting things to kind of leveled out by now. But with the interest rates doing what they did and this and that, it's kind of still a roller coaster of what's going to happen, and that's why bringing you guys on again this year and talking a little bit about where we're at this point and where things are going forward. Real estate's become really interesting when it comes to that.
Yes, it has.
This should be a different year, being an election year. Things should swap around a little bit.
You keep charts of all this stuff, and you're probably better attuned with this than me. But I see every time there's a presidential election, especially presidential election, we see it slow down because when these ads start, we're lucky that we don't have a primary going on right now. And even when our primary comes in March, we're not going to get a lot of advertising because things will pretty much be done by then. But it's that he's an idiot, she's an idiot, he does this, she does that, they do this, blah, blah, blah. And people sit there and they watch that. And even though it doesn't directly affect them, it does affect them psychologically. And they all just kind of freeze up and see, unless they've got to do something, you'll see people not doing anything. And they'll wait, and then the election goes by, and then, okay, let's go.
How about in your world, Chris?
Yeah, same thing. I mean, we're in several different markets, but, you know, interest rate sitting has been a real issue probably the last 6 months, you know, especially with people that are sitting on 3%, 3.5% money as far as getting listed and stuff. I think that'll definitely start. I think the warm fuzzy is you know, when we start hitting the 5s and see a little decline, that's opening up. I've talked to Bob. We were just talking while we're sitting over there, and then I talked to a couple other realtors yesterday, and I think Bob will go over this. Is that we seem to see more listings coming on the market right now. Through the holidays, and people are starting to list.
Yeah, because when we were on a year ago, there were like 100 listings. Mm-hmm. There's 317 now. So that's an appreciable jump in the past year. And people, they're not really sure what they want to do. Do we really want to move? Well, let's see what happens. Some of them still think it's 2021 and they're going to be able to get that bump in money when the rates were 3%. That's what forced the houses up because there was such a demand. And I think that as we go forward, we're going to see as the rates come down, we'll start to see that demand again. And as I said, you're better to be sitting in your own living room renegotiating your rate than you are to be out there trying to find a house with a number of other people and not having the same choices that you've got right now. 300 houses should give you a pretty good choice.
These people that are sitting on these 3.5% mortgages, are they assumable?
No, the really only assumable rates out there are VAs, technically. So, and a non-veteran can assume them. So, but you also have to pay the spread between what they owe and what you're selling it for.
Mm-hmm.
So, if you have a $150,000 VA loan, but they're selling it for $200, you can assume they're $150, but you got to come up with the
You
difference.
got to come up with the other
Yeah,
50.
yeah. They won't redo the loan up to the new sales price.
Can you
So,
refinance? Could you finance that 50 though?
not
gotta come up
really.
with
They used to do seconds, but I mean, really, for all practical purposes, it's going to have to be a
Okay,
cash
okay.
differential. So.
Yeah. Back in the mid 80s, early 90s, the assumable mortgage was a pretty big thing.
Yeah. They've really cut that out. There's really VA's only one.
In the
So,
secondary, second mortgage, that was more popular back then as well.
Yeah. You used to do combinations like an 80% first, a 15% second, and they put 5% down. But that's pretty much been wiped out.
Yeah,
You don't really see that
Everybody
anymore.
wants to be in that number one spot.
Yeah. A lot of lenders ate the seconds. So.
Well, that happened in '08. There was a lot of that where people were coming in, taking the loan, and then taking an equity loan.
Yep.
People were walking away from the closing table with money
Yep.
as a buyer.
Yeah. What a deal.
Wait
What a
a
bargain.
Wait a minute.
That could be
Yeah.
Who thought this was going to be a good idea?
Yeah.
And then we paid the price for that.
Yep.
And they just let it happen.
Oh, yeah. Because there was a lot of shuffling going on.
Yep. Turn and burn.
Yeah.
Chris, what determines the interest rate?
What determines the interest rate?
Who sets these rates? as
Well,
far as
I
a
mean,
home loan goes?
really, they're not. We tell everybody. I mean, if you want to use a layman's thing to kind of track rates, you use the 10-year Treasury, but that's not the actual rate. But that's an indication, kind of rates are going up or down
It's going
depending
up,
on the
yeah.
yield. So I don't know. I looked at the 10-year yield yesterday. I think it was like 4.08 or something yesterday morning. So there's a spread on top of that. So, but there's actually a back-end security called the Jennies and the Fannies that you can't track unless you pay to track them, and that's really the determining factor on how that rate's moving up and down. So it's an open, interest rates are open market. I mean, there's not the Federal Reserve, even though that they will adjust rates, raise or lower, they're not effectively setting the rate. So they're just setting, Fed funds rates. So, so there's not anybody that says VA interest rates are 5. It's like buying a stock.
Okay.
I mean, that's what a lot of times I have to tell clients, do you want to lock or float? It's like buying a stock. Hopefully you buy it and rates go up, right? So you've bought it lower and feel better. But when we lock in, if rates go down to a certain point, you bought that rate at 5% because the companies that we deal with in the secondary market have to hedge that,
Yeah, right.
So they're guaranteeing you that rate. If you're closing in 45 days, they're going to guarantee that money's available for you at that rate when you close. So it's open market. So, and we're already seeing some effects, I think, in interest rates of their indication that the Fed may lower, come about March, May of this year. So that's already driven our rates down a little bit.
So many people you talk to say, well, I'm just going to wait for the interest rates to come back down before I buy a house. Smart advice or bad advice?
Bad advice in my school of thinking, because like I say, prices are going to go up again. They'll just continue to rise because there'll be more demand. You get 300 houses out there, you should be able to find something. I mean, it's not the 600 that we've had at one time or another, a couple times, because generally here we're more of a buyer's market than a seller's market. So, but if you are in the market and you're getting ready to, you're getting ready to start your family, you're going to get out of mom's basement, you're going to do whatever it is, life events that occur, I would be out looking now. And then you can always come back and you can refi, you can do a lot of other things, but it'd be a lot better to be doing it in your living room
Then mom's basement.
than mom's basement, because you're not competing against as many people. Especially this time of year, the market kind of slows down a little bit anyway. It's going to be really cold this weekend, so this would be a good weekend to be out looking. If if you were in the market to do, biggest thing is find out where you're supposed to be. Get pre-approved. Call Chris. Local banks, stay off the internet, and Chris is going to say the same thing. Stay off the internet. Deal with somebody that you can physically see, and they can see you, and get them all the paperwork that they need, but get pre-approved.
There you go. It's time for a break. You're watching the morning show on XL7 TV. We'll be back in just a moment. Welcome back to the morning show on XL7 TV. This morning I got Mr. Bob Zdora from the Z team of Century 21 LeMac Realty, Mr. Chris Nosari from Nosari Home Mortgage. Gentlemen, we're seeing a lot of changes over the last 24 months. So, we talked about last year, but go back one more set of months, go back 24 months. There's been a huge cycle.
Oh, sure. Between the interest rates made a big difference as far as people's buyability, what they could afford.
We made that term, buyability.
Yeah, buyability, what people can afford to do. And obviously the government's intention with raising interest rates was that people who couldn't buy as much and to slow the economy down. That's where we are. And the interest rates have, they got a little goofy there at 8. And that was a big story when they hit 8. It was a big story. It was, national news. Now that we're in the 6s and more people are able to purchase things again, that's not a story anymore.
Yeah. Chris, what is the current rate?
Your current conventional rates are mid to lower 6s, and some of your government stuff's in the 5s, depending on loan size and credit score. So, we've locked some stuff in the 5s, which makes me super happy.
Oh, yeah.
How important is a credit score?
It always helps you on interest rate, typically. On the government loans, it's not as critical, but on conventional lending, it's very critical. So,
first-time home buyers out there watching the show this morning, what credit score do they need to have before they come and talk to you about doing something?
Loaded question. 620 and above, helps. So the terms aren't as, terms get a little bit sloppy and stuff, and a lot more difficult when you go under 620, but 620 and above. And a lot of times we do soft pulls on credit a lot for our first time home buyers, just to get a preview and not hit their credit, and then work on things that they need to work on. Mm-hmm. So, may not be a buyer now, but maybe a buyer just in 3 months, or they're starting the buying process and they don't realize there's a collection out there. So, we need to get that handled on the front end. So we always, do that for our clients. We want to look at credit right away. Mm-hmm. So, because a lot of times there's things you can fix that, if they don't want you to pull their credit, but they're going to be buying a house in 90 days, if you got 90 days advance to start working on it, it helps them tremendously when they know they're ready.
If you got a hanger out there, a collection, an old cell phone bill, something that's just dangling, how long does it take to clear that off your credit report?
Well,
can it be done quicker than just going through the normal cycle?
Well, what most people don't realize about collections typically in this credit scoring process is that it actually lowers your credit score typically when you pay it off, but your score comes up a lot faster. So we actually have a lot of times where we're pre-approving somebody for a loan and we won't let them pay their collections off because it's actually going to damage their score and they're approvable as they sit. So it's kind of a balance on that. So, but a 60 to 90 days is good on collections to start seeing this not have a super negative effect on the score. So
I think that's important that people don't realize when they do have dings on their credit, the importance of coming and getting, because which ones to pay off. You know how much to pay off. And when there's people trying to do it on their own, may spend money on stuff that really didn't matter as far as your credit scores. It matters that you pay your bills.
Right.
But as far as paying off something that's going to help you, you need to get help getting that done.
Right. And I mean, this is nothing against lenders, but lenders in general, there's a lot of misinformation that clients are given on like paying collections off and stuff. And we'll have somebody come in our office that was somewhere else, and they went and paid a collection off, and they were approvable before they paid their collection off. They were fine. They shouldn't have been told to do that. So it's super important to get with professionals that know what they're doing. So, and we run some credit scoring modules too in our office, and we've got some predicated models that will say, okay, if we want to get to a 640 score, it'll literally say pay this down $102, blah 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 blah, to get you to the score you need to be. So, but that's the meat and potatoes of getting your credit score right, is making sure you're doing the right things. Because what people think, paying an account off all the way, is not necessarily good for their credit. It a lot of times you want to leave an open balance. It may only be $10, but you don't want to pay stuff down to zero. So, super important.
Is there such a thing as a no credit score?
Yeah.
And manual underwriting?
Sure. Yeah, we still do manual and underwriting. A lot of lenders don't, but we still do manual underwriting on a no score, and that's just building alternative credit, rent, utilities, stuff like that.
Just have some kind of a payment
Yep,
record?
USDA allows it. Conventional started to allow it. It's a little tougher to get approved, but FHA, USDA, VA, all in our office, we have no credit score programming. So, yep.
But what about proof of income? People work in different things.
We don't require that. No, just kidding.
So that was a quick question.
Yeah, it does.
People work in unusual careers now, and may not have the full 1099s or may not.
Gig employees, is that what they call them? Gig
Something-
workers?
yeah. Okay.
So, I've seen it all.
I'm sure you
In
have.
30 years or 31 years of me doing this, I have seen it all. So, which makes it real important, and I have to help my loan officers to know what questions to ask when somebody says they work on the road and they're a boiler maker, or they work on the barges.
Yeah,
Those
that was-
people,
well, that's one of the
those
things
people
that-
are paid by the day.
Yeah.
These people are paid, their union, they jump jobs every 3 weeks, so it's real, I'm a truck driver, but I get W-2 income. Well, are you paid by the load, by the mile, blah, blah, blah? That's actually commission income, so you analyze that differently. So that's super important because there are so many different fields. But, getting exposed to those as a lender or a loan officer, you kind of know how to handle them. Because there's all kinds of different ways people get paid, and it's amazing in knowing how to analyze it and what program that will work for or not work for. So,
And we have a lot of those type people that live here, especially from 25 to 45.
Absolutely, especially that. Go back to the let's call it the old telecommunications day when everybody. there was dozens.
I had 105 employees from Mountain Home.
Yeah, that worked on the road. Right.
My office was in Dallas.
Yeah.
And I had 105
Yeah,
employees that worked all across the United States.
Yeah, and they're on sometimes for a month, off for 2 weeks. They're going to draw unemployment and be there for 3 months. So you just have to, it's
Deal with that function.
it's
of life.
interesting. Yeah.
The good old days, matter of fact.
Yeah.
For
and
you.
It's also interesting to see what this is the sidebar, is what you think makes a lot of money and what surprises you. Wow, holy cow, I didn't realize that.
Didn't realize that worked so well, huh?
Yeah.
Or you should be doing much better than that.
Well, it's crazy. So, but the Mountain Home's always had a lot of people that worked on the road.
Yeah, very much.
Oh, so centrally located.
Yeah.
You're in the middle of the country here.
Yeah.
Back in those prime days, we actually had an airport here, though.
Yeah.
Well-
that's true.
Well, we got an airport, just used differently.
Yeah.
Okay.
So people need to bring you whatever they have when they come, because when they get done with their interview over there with you, you're gonna know what they're doing. So what do they need to
And
do?
income is the most, one of the most important things.
Sure.
So when we
Oh,
talk
yeah.
to them on the phone, we'll tell them, exactly if they're self-employed, we need, tax returns and their full tax returns. If they're simple W-2 employee, we get pay stubs. And we tend to be quite honest with you, we tend not to browbeat them on the front end just to get them approved. We like to get them in and just have them bring our core stuff so we can get them approved. And then once we can, that's why I still like to take a lot of applications over the phone. There's a lot of lenders that just send the app to them, And I don't like to do that because I discover a lot talking to people.
Oh, yeah.
You know, they'll say something in conversation that triggers me to go, oh, hold on a second. You know, oh, you were just recently divorced. Is there child support, alimony? You know, so, you know, we like to really talk to our clients. And we have some that just want the app, you know, and send it in, but we really always want to try to interview them. So
Because you want to be because if you're buying, you want to get as much of this done as you can.
Well, and we want to make sure that when we're sending Bob Zdora a client, that he's not, you know, spending his time and gas money driving somebody around the Ozarks and they're not really approvable.
And it breaks them too.
Yeah, absolutely.
When, you know, when they realize, oh, I can't do this.
The worst thing is when lenders overpromise and underdeliver, and it sours buyers on
Yes,
the
indeed.
home process.
Yes, indeed.
You know, because a lot of times you guys will get somebody that's turned down, and you'll even try to send them to us, but they're
Yeah.
been
No, we're not
put
going to
down.
do
You
this.
know,
We're
they're
not going to do
just they
anything.
just don't think anybody at that lender told them. They just don't think anybody else can do anything for them. So, you know, they just won't even try when they're potentially a very easy doable deal. So, yeah, that's the bad part about it.
When you issue a pre-approval letter, how long do those normally? How long are they good for?
Well, credit reports are good for 120 days. You know, people ask that all the time. We usually put a little limit on them because pay stubs and stuff will run out. But like we tell all our clients, as long as you don't go do anything that
Crazy.
affects our pre-approval,
Don't buy furniture before you
keep paying
move
your
in.
bills and you
Before
stay on your
close.
job. Really, I mean,
Don't go buy a new car.
the pre-approvals is good for, you know, as long as you keep your stuff together. Which brings me back to one of the questions that Linda wanted me to talk about.
Yes.
Somebody being pre-approved 60 days ago versus somebody being pre-approved right now. Well, 60 days ago, rates were in the high to mid sevens, and now rates have fallen. So if people were pre-approved back then, getting a little updated pre-approval may expand your buying power $30,000, $50,000. So that's one thing that people can do that been pre-approved and have set, because I think, you know, what I saw was about October, and I told my staff this, that I really felt like, based on where rates were sitting then and going, that we were going to do nothing
Yeah.
come about the 10th of November through the new year, just because rates had gotten so high. Then we were hitting Christmas and the holidays, and usually that's slower anyway. So a lot of those people were, you know, got pre-approved, but were like, it's so
We're not
low,
gonna do
or it's
anything.
low, we're not
Yeah.
going to do anything. So I would really encourage those people to get back out and get an updated pre-approval.
How long does it take?
To get an updated pre-approval,
Or get a pre-approval altogether?
10 minutes. I mean,
It's
you know,
just-
you can
it's
pull
pretty quick.
credit, do the interview, and look at pay stubs or tax returns. Some people are a little more complicated. I mean, we won't just hand them out based on what you fill out, which is what happens with a lot of the internet
Right.
lenders.
Oh, especially the internet.
You know, and we're not afraid of, like Bob said, you know, shop local, don't go to the internet. We're not afraid of the internet lenders' rates and terms, because we have better rates and terms than all the internet lenders. It's making sure you're getting qualified
Right.
properly.
Exactly.
Because you can go on ABC Loans and fill your information out. Their automated system may kick you out of pre-approval, but I can also put that I make $1 million a month.
And that's
So-
what happens.
Yeah.
I mean,
yeah.
that's, and even when they get them done, when the fees and everything are on there, they
Right.
don't build these big football stadiums and baseball fields and all this other stuff out of the kindness of their heart. They're making a lot of money to be able to do that.
And when people fill out their own loan application with their own information, they're not purposely misleading the lender, but, you know, yeah, I work 40 hours a week. And then you get their pay stubs, and they're actually averaging 38 and a half. That changes. That
Sure,
changes.
you're
That can
full-time,
change- that
isn't it? You're not
changes
full-time,
what
you're
they can
diff-
get approved for.
right,
Just an
right.
hour and a half every pay stub over 52 weeks in the year lowers their income. So, you know, that's why we always want to look at stuff, and that's why we always tell people that, you know, we want to see your information to give you a pre-approval.
Because you want them to be happy. You want the whole experience to be good. We
doesn't-
want them to be
what
successful.
doesn't make sense is why in the world would you fabricate this financial statement to get something you can't afford?
Right. Yeah. I've me personally, in 30 some odd years of lending, I've literally only had probably 5 or less people actually provide me false tax returns or something false purposely.
Yeah.
You know, And that's thousands of loans. I mean, thousands of people that we've seen, thousands. So, yeah. Yeah, most people, like we tell everybody that we can get you pre-approved for this, but run your budget. What can you afford? Because
Yeah.
we're not
Big
making.
that's a big part.
We're not making your payment for it.
Exactly.
Oh, it's huge, and especially young kids. It's like going on the car lot and seeing the Corvette, right? When you really need to be buying the Prius.
Yeah.
Right. So, it's we tell them all the time, please, 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 if we can get you approved for this, make sure
That
you
your
can afford it.
lifestyle is going to
Yeah.
allow that to
Yeah,
happen.
your rent $600, you're going to a $1,200 payment, and you got $50 in your checking account. How's that going to work? So,
Yeah, because with that big house comes a big electric bill.
and maintenance, and utilities,
Insurance
and,
and taxes and everything else.
Yeah.
I mean, and that's a big part of when we talk to especially the kids, the first timers. It's kind of interesting when we talk to people from other markets that come here, and we start talking about things like that, the utilities and the taxes and everything else. I'm like, really? Their eyes kind of gloss over. Like,
Right.
really? That's all?
yeah.
I'm going to have to take a quick break. You're watching the morning show on XL7 TV. We'll be back just a moment.
Little plug.
Welcome back to the morning show on XL7 TV. Bob Zdora of the Z Team, Century 21 LeMac Realty, Mr. Chris, the Karnacki, Nosari. No crystal ball?
No crystal ball. Hold on.
There we go. We need Scooter.
So what's going on, Zdora?
Well, what we wanted to do, as we did last year, just to get kind of an idea and some predictions of where we think the financial end of real estate will be with mortgages and refis, things like that.
So we're supposed to take them serious.
Yeah, time
Well,
to get serious.
at least, yeah.
I think this
Kind
is
of
a
a twofer.
Johnny Carson throwback, I think.
That's right, that's right.
Yeah. So,
The old Karnacki.
Karnak.
What are we looking
Karnak
at?
the Magnificent. So what do you think? Where are we going?
Interest rates.
Okay.
What I believe is going to happen this year, starting more towards the middle of the year, that we'll see rates firmly drop in the fives. We're anticipating 3 Fed lowerings, not raises. Conventional money will be in the mid fives, and we will start seeing government money by the end of the year hitting that 5 to 4 3/4 mark. That's what I think is going to happen. I think we've already priced in about 100 basis points drop on the first Fed lowering, and it's gotten us to where we are right now, 6 1/4, 6.5 on conventional, and hitting some bigger loan amounts in the fives. So that is my prediction for 2024, which I will say is much better than I was predicting about 3 months ago.
Yeah. Oh, yeah.
So
Yep.
I am a happy camper for what's going to happen in 2024. Our other prediction is in the real estate market that we will see values raise between 10 and 14% as those rates tend to trickle down.
As the mortgage rates go down, the housing prices are going to go up.
That's right. Which leads back to your statement, buy the house now, renegotiate or refi your rate down the road. Because in that, if you take where rates are right now and house prices, and rates drop but house prices appreciate, that payment is going to be virtually the same because you're going to pay more for the house even with a little lower rate.
Sure.
So buy now. Now's the time to buy.
When you talk about date the rate, marry the, and refinance and all that stuff, if somebody goes in and buys now and they're at 6, the rates drastically change to 5 1/4. 3/4% doesn't seem like a drastic change, but in some numbers it really is. Is all the fees have to be repaid again, or some of that negotiable up front?
It depends on program because there's several of the government programs that you don't have to have a new appraisal. You're basically doing title fees and resetting the escrow account. So it really depends on program. And you got to be very careful refinancing and making sure that you don't do it too quickly, I think, in the upcoming market. Because there's lenders out there starving across the country, Home Loan Depot, the Rocket Mortgages. I mean, all lenders have, we were just talking a drastic reduction in 40% of all mortgage originators have left the market. So they'll try to get you refinance for half a point. So you've got to be patient and make sure that you're doing it and it's worthwhile.
Where does it make
They're just
sense?
working the churn. I mean, they're just
It makes sense based on your situation. Lowering your rate 3/4 or a point, and you borrowed 150,000 is not worth it. But maybe lowering your rate a point and you borrowed 300,000 is worth it. So it's all, there's no, it used to be 2% or 1.5% or whatever. It really needs to be situational based on the program you're in and the reduction in payment. I.e., if you're in a 15-year fixed rate and the rate only goes down a point, it may not be worth it if you're 5 years into it and you're paying more principal than interest. So.
right.
You just need to make sure you get with somebody that's honest and will tell you.
Is a 30-year mortgage still the most common?
Absolutely. Yeah, by far.
Do you do very many 15s?
Not really.
Is there that much difference between a 15
The
and a 30?
spread is not what it used to be. So right now the spread's probably 3/4 of a point, maybe a half, depending on program. So it used to be a lot larger. So that's narrowed right now.
Is there anything beyond 30?
No. Not in our markets.
Not yet.
There used to be a 40-year mortgage, and they did away with that. So, but hold on a second. No, I don't think they're bringing it back.
and at 15 and 30, you're better to take it for the 30 and just pay more and pay it down so that if something does happen or you want to do something, you can take some of that money and you'll still have a cushion in there of making your normal monthly payment is going to be a lot less. Whereas if you're on a 15, you got to make $2,000 a month.
Right. It
Whereas
gives you more
if
flexibility.
If you're on a 30, it may only be 15 or 16.
Yeah.
So you got to that $400 a month could make a difference
Gives you a
if you
little
want
bit
to
of
do
room.
something.
And we don't write anything that has a prepayment penalty, so they can always pay more. So, and the structure of where stuff is right now, every lender doing a 30-year fixed rate right now knows that more than likely in the next 36 months, that loan's going to get refinanced. So although it's a 30-year fixed rate, to them it's only a 5-year fix because they know that it's going to come out and be recirculated.
Because how many of those really go to term?
Not very many.
Not very
I mean,
many.
the overall market structure is that every time a lender wrote a 30-year fixed rate, that loan would usually pay off in the first 84 months.
Yeah.
So that's why they lend it so low. I mean, you wouldn't give me your money for 30 years for 3%, right? I mean, that'd be a bad investment,
Yeah.
But they know in their algorithms that they don't
flip.
usually last. That
We've got about a minute and a half left. Chris, tell me, how many offices do you have?
3 right now. Mountain Home, Harrison, and West Plains.
Yep.
Yep.
Fully manned? and open
Fully manned, absolutely.
5 days a week?
Yep, absolutely. My loan officers work 7 days a week. So
Chris-
all my realtors know they can call anytime. I mean,
Yes.
just
True.
And some friends.
and some friends. Yeah. Well, I tend to answer the realtors' calls
Yeah.
more likely than a friend's,
We're generally trying to make
Yeah,
them money,
no,
not
yeah, just-
take money from them. Yeah.
or wanting to borrow something, right?
Yeah, there you go.
Yeah.
Mr. Zdora, how many realtors do you have working on the Z team?
We have 6 of us that are working there and doing a great job. Everybody's out trying to help people. It's always been the message. It's how we get teamed up with agents like Chris and people that we know are going to be there to help our clients and help them to move forward to successful closings, whether they're buying or selling. Because the mortgage company is just as important on the sell side to make sure that the deal's going to get done. So that they know they can pack up and start to make plans and find that other house.
Real quick, give me your phone number. Yours.
870-405-0793.
Chris,
870-425-8351.
thanks for joining us this morning. This has been the Morning Show on XL7 TV. We'll see you tomorrow.